Busy man, busy man. As we're doing an Entre networking event online, we're gonna have two more questions before we start taking some Q&A. But how do you look at networking? Do you network? How do you stay in contact with people? And then I think we could roll into the latest state of what's going on with COVID. But let's talk about networking and your thoughts on it, and how you best network so that we could possibly give some value to the people that are on here right now.
Yeah, so I respond to that by saying there's multiple styles of venture capital. I think it's probably one of the reasons why I like it so much, and I'm still doing it 20 years in. There is no specific formula or approach you need to take in venture capital. And why do I say that, and how does it relate to your question about networking? Because some venture capitalists are unbelievably outgoing, unbelievably charismatic, love to be in large rooms of people and have tons of relationships, and find ways of cultivating massive networks of massive numbers of people, and it gives them energy. In fact, one of my partners, Byron Dieter, in our California office, is just like that. Everyone is friends with Byron. I'm not like that. I'm much more introverted. It is exhausting to me to go to a big networking event and try to make conversation with people. It's just not my style. And yet there is no one way of doing venture capital well. My style historically has been to think about where I want to invest and then sort of rifle shoot right at the specific companies or entrepreneurs that I think are interesting. One of my first successful investments I alluded to earlier was Yelp. I found out about Yelp as a consumer. I thought it was really compelling on a few dimensions. And in fact, I borrowed my wife's Harvard Business School credentials to log on to find out what Jeremy Stoppelman's email address was, because I knew he had gone there before dropping out, so I could send him an email. And I reached out to him and I said I wanted to meet, and I explained why. And so to me, that's not networking. That's like being very precise about what to do. Now that I've been doing this for such a long period of time, I tend to know a lot of other people who are investors and lots of entrepreneurs. And so I have a network, but I wouldn't say I'm an A+ networker by any stretch of the imagination. And I don't think you need to be. Now, there are some people for whom it's an incredibly potent weapon, and I'm jealous of those people. I wish I had that ability to build a massive network and then I derived energy from it. Instead, like I said, to me, that's my general view is, if you find networking to be fun and you get energy from it, then you should do it a lot and you'll get a really nice return on it. But if you find networking to be a ton of work, then I suggest you find a line of work or a way of approaching your work that doesn't require it, because why do something that you're not enjoying? I think
yeah, that was great. And I want to follow that up with, you talked about being precise with a great story of hacking into the mainframe to get the email address. But do you have any other stories like that on how to be precise? Can you dive into the precision of getting after the person you want? Because I think a lot of this is, I'm trying to meet with somebody, they're trying to meet with somebody. How can we be precise? What's the best tactics or tricks to do that?
Yeah, I mean, I think one, persistence matters a lot. And so I'll tell you another story. So we develop, as I alluded to before, these roadmaps at Bessemer, and we share them with all of our colleagues. And this is now back in 2006, I guess, 2005 or 2006. And one of the roadmaps I had been working on was this idea that you could build a really valuable media business where all the content, an internet media business, where all the content was created by the user, a user-generated content business. Now these are pretty well understood, but back in 2004, 2005, 2006, it wasn't that well understood. And so I mentioned this and explained in much more detail than I'm going to give here why I thought it was interesting and what I thought the key characteristics were to one of my younger colleagues, a guy named Mitchell Green, who was an analyst at Bessemer at the time. And he found this company in St. Petersburg, Florida, which at the time was called Wiki Cities, and it was founded by a guy named Jimmy Wales. And Jimmy Wales, people may know, was the founder and co-creator of the Wikipedia. And he was sort of famous at the time. Wikipedia, back in 2005, had already become a pretty big internet website. And Wiki Cities was almost a derivative of Wikipedia, but it was meant to be a for-profit business, whereas Wikipedia was this not-for-profit public utility as an encyclopedia. And so Mitchell just sent an email to Jimmy. And the first email, Jimmy didn't reply. And the second email, he didn't reply. And the third email, he didn't reply. I think it was like 14 emails that Mitchell had to send. And each one got increasingly specific about why we thought Wiki Cities had a ton of potential, what the reasons were that we were reaching out, how we could be helpful. And I think eventually, after like the 14th or 15th email, Jimmy replied, and one thing led to another. Mitchell and I traveled down to St. Petersburg, Florida from from New York. We heard about the vision for WikiCities, and ultimately we prevailed on Jimmy to let us invest. Jimmy and the company ultimately moved from St. Petersburg, Florida, which is not exactly a hotbed for startups, though I'm sure it's possible to build a successful startup there. That wasn't meant to be for what was then WikiCities. WikiCities went through a few transformations, eventually became Wikia and then Fandom, and turned out to be a very successful company with $100 million plus in revenue, and we sold the business a couple of years ago to TPG. And so that was a case where if you know what you want and you can spend enough time crafting the very specific message and apply the right persistence, you can, even if Mitchell at the time was a 22-year-old kid who managed to get Jimmy, one of the icons of the consumer internet, to respond to him because he was persistent and precise.
That's great. Before we open up the Q&A portion of it, the elephant in the room obviously is we are on video Skype here because of COVID-19, coronavirus. And I saw a question from Daryl earlier as we were talking, its impact on getting funding and just your thoughts of what's happening. Can you kind of talk through it? I know before we got into this, you said you had a lot of thoughts. So love to hear your thoughts on how this is all going to play out and where how it's going to impact the entrepreneurs. And then Mike can take over and we can do the Q&A for the rest of the portion here. So start asking your questions too.
So COVID obviously has affected all of us. It sucks, basically. That's my two-word summary of COVID on so many dimensions. And so I'll start with my depressing thoughts on it, and then I'll move to my more optimistic thoughts. Better to end on a positive note. And so my depressing thoughts are, I think it's a lot worse than still people are admitting or recognizing. And I think that means people in general and even the stock market. I don't think it's fully been internalized by people how long and how tough this is going to be. And I think the economy is like a series of dominoes, and the fact that a whole bunch of them at the beginning of the domino line have tipped, to me means with almost certainty ones way down the line are also going to fall over, which represent a continued slowing and difficult challenges with the economy. And yet, because there's so many other dominoes in between, I think people are having a hard time fully recognizing or accepting that. And short of a vaccine coming out really, really soon, which I think all the experts agree is virtually impossible, I don't see how or why healthy people are going to suddenly feel comfortable just going back to their old life again. I just don't see that happening. I think we're going to be in this world of physical distancing or social distancing for quite a while. And I think that's going to have a hugely negative impact on many, many businesses. We're lucky we have a few companies in our portfolio that are actually benefiting from this. Businesses like video game companies are doing great, but most companies are suffering in some way, shape, or form. That's causing them to contract, lay off people, reduce expenses, and that will trickle through the economy, which we don't fully understand. So I feel like we're still in the eye of the storm. And my advice to all companies, large, medium, small, or tiny, is marshal your resources and hoard cash, because the idea in 2020, which I'm starting to term as sort of the lost year, is not to necessarily drive a ton of success in 2020. It's to make sure you can come out of it alive with resources to go on the attack once this massive crisis is under control. So I'm pretty down in general about what's likely to happen in the coming weeks and months. And that's just a bummer, because by nature, venture capitalists are typically optimists. After all, we're betting against the odds in little things, hoping they become big things later. But my more optimistic note on COVID is I was reflecting on what are probably three of the best investments Bessemer has made in its history, let alone in the past 10 or 20 years. And the three companies that come to mind are Twilio, Shopify, and Pinterest. And I think it's not a coincidence that my colleagues seeded Twilio in 2009, which was basically at the tail end of the last crisis to hit the world and America, which was the financial crisis. Shopify we funded in 2010, and Pinterest in 2011. All three of those companies grew into become multi-billion-dollar or even deca-billion-dollar publicly traded companies. And while we didn't invest in Shopify or Pinterest until 2010, 2011, they got started in the 2008, 2009, actually Shopify even before 2008, but it was a tiny company. They were all either just starting or tiny companies, teeny tiny companies in the middle of 2008 and 2009. And so there are many entrepreneurs today who are starting their companies now, or started their company 6 months ago, or will start in 6 months, that similarly will have to live through the chaos of this enormous crisis as teeny companies with almost no resources. And somehow, some way, Jeff Lawson at Twilio and Ben Silverman at Pinterest and Toby Lutke at Shopify, they found a way to keep their companies alive through this incredibly wrenching crisis. And when they got through it, they were able to obviously persevere and build unbelievably successful companies. So even though I think the near-term outlook is not very pleasant, I think as it relates to entrepreneurship and building great companies, it doesn't matter. It's still quite possible. In fact, like I said, 3 of the best investments in the history of Bessemer, which itself lasts over 100 years. Bessemer started in 1911 doing venture capital investments. And I think it's no coincidence that 3 of the best performing companies we've ever seen all emerged out of the last crisis. So I'm optimistic about what may emerge out of this crisis, but I'm anxious to get through it because it's going to be a lot more fun when we get to the other side.